Well, thank you, Kyle, and this is an opportunity for you to pose some questions to our panellists on some of the things that they've said, or perhaps ask a question on something you wish they had have said. But I'm going to exercise Chairman's prerogative just to make one comment, and that is to say that I was fascinated by the fact that each of our presenters talked about something which CEDA has sought to shine a public policy light on over the last couple of years. I indicated in my opening comments that we had done some research that looked at many of these things, and I couldn't help reflect on the fact that we'd produced a report last year that looked at technology, that looked at advanced manufacturing. The fact that our major report that will come out in June is looking at the future of work, but through the lens of digital disruption. In other words, where is technology taking us, and what does that mean in terms of Australia's economic future, the implications for training, the implications for the education system, the way we work. Do we work from home? Do we work in an office? Is the office constructed like it currently is? What is the nature of our cities likely to be, and so on? These are some of the things that come out when we start to reflect on all of the points that were made by our colleagues here in their presentations. The other thing, of course, is that I think one of the shining lights that came out from all the presentations is that a genuine commitment to good public policy relies on evidence-based solutions. There might be a couple of options that are put up, but you've then got to determine what is the best option that will have the greatest good, and then you've got to prosecute the case as to why that might happen. And of course, John put it quite nicely about jockeys and horses, and I think that's probably right as well. But now is your opportunity, please. There are our colleagues from CEDA around the room waving microphones in their hot little hands now, and your opportunity to pose questions, please. Don't be shy. I've got 100 of them, but I don't want to do that. Here, thank you. We've got a microphone coming. Thank you.
Hi, thank you very much for all your interesting views. I was interested though, there was no real exploration of India, and I was just wondering if you had any thoughts about India as an emerging economy, and I suppose there's been a lot of press around us building a better relationship with India.
Well, India probably, in terms of Asia-Pacific and the immediate outlook, is the one country in Asia-Pacific bucking the trend and looking stronger. I think that the issues with India, continue to be, pretty structural in terms of the organisation and the ability to maintain momentum. But definitely in terms of long-term prospects, India has one of the few countries that has a very young workforce, and that has obviously a lot of potential in terms of the opportunity in the medium term. Quite different in terms of China, where I think by 2040 you're really coming over the other side of the demographics in terms of ageing and shrinking workforce. So,
thank you.
Michael Duff, BMD Constructions, interested in the infrastructure market, and I'd like to talk about sovereign risk in the Australian infrastructure market, and particularly with the canning of East-West Link in Victoria, and what nervousness that puts into infrastructure investment and also the construction market. Obviously Victoria opened the bidding yesterday with their compensation package. But how going forward does do you see construction markets that, with political volatility in Australia, where one government makes a decision to put a $6 billion project forward and the next one cans it overnight?
Me to answer that one?
Yeah, I'll
you want to have a
Look,
go?
I think it obviously is a risk. I was doing some business in PNG recently, and I was talking to an investor, and they said, I asked whether they were worried about the sovereign risk of PNG. His answer was, I'm more worried about the sovereign risk in Australia. I am very concerned that we don't have a national integrated infrastructure strategy. All sorts of promises have been made about infrastructure. At the federal level, most of them are still effectively unfunded in the budget out years. And yet, if you look across our infrastructure, whether it's transport or hospitals, schools, anywhere, social, economic infrastructure, it's deficient in some places, in many cases in decline. Now, I'd like to think that we could step outside the mould that debt is bad and draw a distinction between debt we use for recurrent expenditure and debt we might use to fund viable infrastructure projects that will give you a sensible 30, 50-year rate of return. I actually believe we could launch, for example, an infrastructure bond at a fairly low coupon these days, 2 to 3%. Australia is seen as a safe haven. There are central banks, sovereign wealth funds, many of which I survey annually, pension and superannuation funds that are looking for that sort of stable, long-term, believable investment. We could raise tens, if not hundreds of billions of dollars, in my view, very easily. We'd need to make sure, though, that we manage that pretty transparently compared to some standard infrastructure investment criteria. So I would take the money that I raised from that fund, that bond, and put it in a fund outside of government, not to be allocated by government, but to be managed professionally outside government. I'd boost Infrastructure Australia to actually have a very open and transparent assessment process of alternative infrastructure projects around the country, ranking them and stating the circumstances under which they are viable, what sort of debt and equity mix you'd get. You could have public-private partnerships, all sorts of possibilities. We could have an infrastructure revolution in this country, but as long as we say all debt is bad and we focus on just trying to close the budget deficit, and in that context actually means we delay or pass on significant infrastructure projects, I think we're going to just continue to wallow where we are.
I might just comment, of course, that in terms of public policy, if you look at the state governments and the approach that they're taking to providing infrastructure, the Commonwealth Government has said that they will contribute on the basis of an asset recycling program. In other words, identify assets currently in public ownership which can be long-term leased or sold. What we're finding around Australia is a great variety of views from different governments of different political persuasions, no more so, of course, from the recent election result here in Queensland, as to what that means. So that on one hand you've got Victoria that's sold almost everything under Labor governments, and another Labor government just coming in, it's got one asset left to sell, and that's a couple of port facilities, and as a consequence they're going to continue on with that, and there isn't the level of agitation in Victoria about what the outcome of that might mean. You mentioned the east-west link in Victoria and issues around that, politics and so on. Let's see where that all goes. But on the weekend the government came out and announced some major construction programs about removing level crossings, which they had promised, which will apparently involve both overpasses, underpasses, simple solutions to shutting a crossing, but this is going to be major infrastructure development that will be there. How that's to be funded is from the sale of the assets or the long-term lease of the ports. In New South Wales, Premier Mike Baird appeared on our platform last Friday and indicated, despite what the polls might be saying, one, that they will get re-elected, but two, the great vast majority of New South Welsh people don't want to see assets sold in terms of the privatisation of electricity assets. For some reason they believe that if they're in government hands, electricity prices are cheaper if they're in private hands, go figure, but anyway, that's the view. And he is going to continue on with that as a policy that he will take the election. So around the question of infrastructure, John has got a solution which he's spoken about previously, but I think the other element we've got when we're looking about good public policy outcomes really goes down to the question about differences of opinion from national and state governments, because as I said, at the end of the day, the Commonwealth has said they will only contribute to infrastructure development if state governments sell off some of the assets that they have. I had a question over here. Thank you.
Yeah, only for Dr. Hewson. A few days ago, Glenn Stevens said that interest rate policy was likely to be less effective than it was 8 to 10 years ago. As a rusted-on Keynesian, I never thought it was much good anyhow. But could he please explain the rationale for that statement, if he can?
I think generally central banks are surprised that the interest rate policies that they've pursued haven't had the real sector effects they'd imagined they would have. The Reserve Bank has always had a profound anti-inflation bias. It sees inflation long before any of us can see it, or imagines it can, and it's run an interest rate strategy that supports that. I mean, I think they have consistently been very slow and very quick to put up rates, very slow to bring them down over several decades. If you look at the handling of the GFC, initially they brought them down from 7.5% quite dramatically. Then they perceived they could see inflationary pressure, so they put them back up again. Now they've dribbled them down with taking 18 months for the last change. So I think on balance they've held them too high for too long. And they're surprised. While they have obviously had an impact on some segments of the property sector, I don't think they've had any impact or positive impact or expected impact, to say, on business investment. And that's been a universal phenomenon. When I look at the stock market, as a consequence of that, I see some reasonably good earnings numbers across the stock markets generally. And I ask myself, where did they come from? They didn't come from growing the top line. They mostly came from cutting the bottom line and cutting the cost base and restructuring internally. Now, there's a limit to that. And until we get investment spending to boost the top line, we are going to have a fairly short-lived or unsustainable global recovery. And that's what's caught central banks by surprise, is that the very, very low interest rates, whether it's a liquidity trap or whatever you want to call it, they haven't had the effect. It's just taken our Reserve Bank an inordinate amount of time to recognise their own inadequacy.
And you've got
Mark, perhaps Mark and then Fabienne can comment, but from a banker's perspective, it's not the RBA.
Yeah, look, I agree with John's comments that a lot of Australia has been cutting their cost bases to improve their profits. There's no doubt about that. From my perspective, I absolutely believe we have to go into a phase now of trying to grow our top line, whether that be product changes, geographic, shifts, whatever it takes to do that. And unless we can, make sustainable differences in terms of what we do as a business to grow our top line in Australia, I think, we will continue there's a lack of confidence that's out there, I think, from a business perspective, and I think that will continue to occur.
Yeah, I was going to say expectations and confidence are critical elements in terms of what's playing out. So, if we look at Australia, household debt levels are still very high. So there's a limited amount of capacity for households to take on additional debt, and we're seeing a lot of mortgage owners trying to pay down their mortgages because the outlook for they're worried about their jobs. We're seeing lower wage growth, and that's driving behaviour. On the business side, we do annual capex surveys, and our last capex survey, the top 2,000 spenders were in the world on the corporate side were sitting on about $4.5 trillion worth of cash. So, while there was a lot of cash there for investment, they weren't feeling confident about where to put that money. That you've got asset prices that are very high, and it's driving a mix of behaviours that don't necessarily meet the what we've seen in the past in terms of response to lower interest rates.
Can I just ask a question? If you think of how we got into the GFC, it was basically that the world got flooded with liquidity. And so many investors chase yield. We had the construction of all these bizarre debt instruments on the back of a subprime exposure in the United States, CDOs, CLOs, credit default swaps and so on. Our solution to the problem is actually to flood the world with liquidity again. It sort of worries me.
And I think that it's interesting too, because on the, if you look at the technology side, things are speeding up more and more and more. So, things are much more connected. When you look at the financial markets, more people are, spending a lot more, technology and space in terms of trying to find connections in the global system so they can trade in and out in microseconds. And so, you're getting this sort of, amazing phenomenon of correlations building across the system. And at the same time, the mindset is we need to fight that by finding ways that we can trade and get in and out of markets all the faster. Yet at the same time, most of our problems are about making long-term decisions and parking patient money so that we can build infrastructure to build productive growth for the future. There's a complete disconnect, and I think that there's an element of really taking new paradigm issues and problems and challenges and continuing to try and ram the square peg in the round hole with old paradigm solutions, which is just not going to work. And we need some fundamental shifts in mind shift and some brave people to step out of that and start doing things a bit differently.
I'll just add one other comment. If, as I said in my remarks, and it's been supported here, that one of the main consequences of quantitative easing globally, flooding the world with liquidity, has been more inequality, but more importantly, more debt. And the issue becomes how far you can sustain that. And at some point, central banks will want to put up interest rates. And isn't that going to bring us a massive debt shakeout? And part of the point that's being made in Greece is that, okay, at 175% of GDP, with virtually no political tolerance left in terms of more austerity, the only solution is going to be to draw a line in the sand on debt. And I guess what they're saying is we need a restructuring of our debt, forgiveness of a significant percentage of that debt, and let's start again, because we'll never be able to grow our way out of it or trade our way out of it or have enough austerity to get ourselves out of it. And I think back to 1953, the Germans were given a break in the restructuring of their debt. I think 50% of it was written off and 50% of it was extended for 30 years. And the Greeks, I think, have a similar expectation today that that's the only way out of this problem. And so at some point you're either going to have a debt crisis or you are going to have debt forgiveness, because the debt is still building with negative interest rates, as I said, in a lot of cases.
I have a question here. Thank you.
Hi. Question for Mr. Hewson. I just want to refer to some remarks that Mark made, and he referred to a vote 'em out, throw 'em out culture that has emerged across the country from a political perspective. And I know you've made a few remarks in recent times, particularly in the opinion pages, around the sort of the media domination of the political cycle. How difficult is it for politicians, and increasingly businesses in this position as well, with obviously the rise of social media and petition-type platforms and the like? How difficult is it for politicians to break out of that media straitjacket, I suppose, and take some bold steps and reveal your policies in advance, take some bold political moves that may not necessarily agree with the general public? And in the context of the Queensland election, this is important, where Sydney exports Alan Jones to Brisbane for a couple of weeks, puts him on 4BC, and he fires a missile into the Queensland election campaign. I mean, how can politicians operate in that environment, and can we ever expect a day where we see that cycle broken?
Yeah, you're right. I mean, a lot of the media see themselves as players in the game. They find good government pretty boring. They like the colour and movement of an election contest, a leadership contest, and if they think they can smell it, they create it. Through that few days that Abbott's spill was underway, I did quite a lot of media. I sat on quite a few panels, and I was fascinated with the way some of these journalists who had been dead for the last couple of years suddenly came alive and got really enthusiastic about this and could smell blood. And then you get a statement from, I don't know, Julie Bishop saying that she supported the leader, she saw it as her role, and that she intended to vote against the spill. And they spent the next hour analysing what she really meant to say, which was about as definitive a statement as you could ever get. And there were dozens and dozens of those examples. Alan, being a particular type of individual, has an even bigger influence in certain segments. Now, I guess the only way is that somebody's going to have to risk their leadership on that by actually doing something, being bold, setting out an agenda. And I don't see that capacity. I mean, you listed, I think, the opportunities that exist in this government right now, the intergenerational report, the tax report, the Federation review. It is a unique opportunity, really, for them to set down, say, a 10-year agenda to actually reform the structure of the Federation and associated with that restructuring the tax system against the realities of the intergenerational report. You don't get it better than sitting out there, or will be sitting out there. Will they have the capacity to do that? I doubt it. So out of frustration in recent days, I've been arguing that perhaps these issues are too important to be left to politicians and the short-term political process and the media game. And maybe what we need to do is set up something like a Federation and Tax Commission that actually does the objective evidence-based research on what should be done, lays out the options, finds a way of testing those options with the community, and then ultimately they get adopted by a government in the COAG process to be implemented. But until we start to recognise the weaknesses of what we've got, I think the game is going to continue. As much as I'd hoped that I'd see somebody step out of the game this time around, because I reckon the last election we reached the lowest common denominator. You know, stop the boats, fix the budget, you know. How insulting is that in terms of trying to convince the electorate you're on about, you understand what government's about? We've had no good government for quite some time now, a couple of decades perhaps, because everything's been traded off in terms of short-term politics. And in those circumstances, you have to stop and ask yourself the question, well, if it's maybe these issues are too important to be left to politicians, let's try and find another way to at least get them sensibly debated. Because right now, you know, you can't imagine them looking at the tax system and saying, okay, the big concessions are housing, negative gearing and taxation of the family home, superannuation heavily skewed in favour of the wealthy, GST on 60% of expenditure, but it's on the bit that's not growing as fast as the bit it's not on. And you say, okay, we can fix this relatively straightforwardly. They're not difficult decisions. They're worth billions and billions of dollars to solve a lot of other problems. And everybody rules them out. Consistently, both sides of politics say that's too hard. And if that continues, we aren't ever going to get out of the deficit problem that they find themselves in, and we won't get any of that infrastructure funded, and national disability and those sort of schemes which got a huge electoral support will not be funded. And the numbers are $20 to $30 billion a year in the early 2020s for national disability. Think about it. Where's that going to come from? Whoever's in power is going to have to cut it or face it. You know, so the reality, I think, is to start by saying, okay, we've got some options to fix the deficit. One of them must be to increase total tax burden. If you want all these services, they are going to have to be paid for, and somebody's going to have to stand up and say that. Doesn't mean personal tax rates go up or corporate tax rates go up. They can go down. And you can deliver a new tax system. You might have a bit more reliance on GST. You might do something about negative gearing in a grandfather sense. You might do something about superannuation to fund it. But nobody at this stage is prepared to argue any of the detail of that. They just run a million miles, have a tax review to leave out the GST, leave out superannuation.
Other than CEDA, I have to point out, John. The fact of the matter is that our research report last year, Federation for the 21st Century, our reports that have looked at Australia adjusting 12 months ago, tackled these very questions, and we continue to argue them in public forums such as this. My final comment, of course, was, you know, it hasn't been the same since '96 for some of us, but I have one final question.
I gave you a
over
platform
here.
to do the commercial.
So I think this sort of relates to what you've been talking about, and that's, you know, what can we expect from the Abbott Hockey government, given how much political capital they've chewed through? Is this upcoming budget going to represent any significant shift in the strategy at all, given that that'll be an important frame into the election? And I suppose sort of what drops out of that as a more philosophical question, and you've been addressing it, but can democracies deliver long-term needs of our society without a crisis, given whatever the environment is that's creating this, probably a lot related to media and information technology?
Look, I don't know what they'll do in the budget. If you listen to Hockey, you get one version. You listen to Abbott, you get another. Right now, Hockey's still saying that the existing decisions are on the table to be negotiated through. It's looking like a new broom coming from the Abbott side. But realistically, the capacity to do very much, given the political capital that's been burnt in the big areas, health, education, is fairly limited, unless somebody's prepared to stand out and say, okay, draw a line in the sand, mea culpa, we got it wrong, we've got to have a 10-year strategy to pull this back under control and go into some of the sort of issues we've been talking about.
I mean, look, as I think everybody was saying, it's about having the right vision, the ability then to be able to take that to action and make things happen. And until governments start to, think about the long term, I think we're going to continue to struggle in short-termism, which just continues to create confidence in the Australian, environment.
And there didn't actually seem to be an acknowledgement that perhaps the policy mix needed looking at, because really what was reported in the press was actually what people were thinking in terms of when it was said. There was much more focus on the budget was too bold and too courageous for the times, and the Australian people weren't ready for it. There wasn't necessarily a follow-up statement that perhaps some of the elements of the policy mix needed to come back to the electorate and have a conversation around the mix and what the alternatives were, rather than just saying that we weren't ready for it at that point in time, which I thought was disappointing, because I think that there's more to it than not being prepared to make hard choices if they're for the right reasons, and if they're framed in a way that people can understand the long-term benefits and feel that sacrifices that are going to be made by individuals and others in that process are for the greater good. But we don't have that frame of reference, I think, in the current debate.
And in fact, the CEDA report that was produced in September of 2013 actually looked at this very issue. It was a how-to manual for an incoming government on how you do set good public policy, reflecting on what had happened in the 80s, 90s and the early noughties as well. Perhaps it's time for us to redistribute that to the current government and ask them to have another read of it. I'd like to thank our three panellists, and in moving the formal response, can I invite Kyle Murphy back to the platform?